All right, guys and gals, it's about that time of day again here, folks. Another great day comes to a close, but you know what that means? That means it's time to get back to work here this evening. It's Wednesday evening after all. It is February the 5th, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time, it's great to have you with me. I help traders find the best of the best trade setups using a very simple 3-step strategy that we teach and trade together every morning in our trade room. But my job's a little bit different tonight. Tonight, my job is extremely important because tonight, we're identifying the best levels of support and resistance, the best entry setups and exit targets for tomorrow, and most importantly, how can I forget, we're trying to identify the best traps to avoid so we can keep growing our account in tomorrow. That's Thursday's trading session. And I have a jam-packed video for you guys and gals tonight. Of course, as you can see, the charts are all loaded up in the background. We get some oil, some S&P, some NASDAQ, and some gold. Lots to talk about on the charts tonight. Will oil go back and retest the high? The NASDAQ looks a bit squirrely. Make sure you stay tuned for the NASDAQ tonight. But don't forget the calendar. Some big news tomorrow morning. We thought we were going to get some big news today, but we didn't get the news today, and they're looking for tomorrow for some big news. So we'll grab the calendar. Got a lot to cover on the calendar as we go into the end of this first week of the month. And as always, before we jump into the video though tonight, got a lot to cover here tonight. Before we jump in though, I want to encourage you, if you're here for the first time, make sure you subscribe to the YouTube channel. That way you never miss another great video. And don't forget, if you have any questions, drop those questions in the comment section below. And as always, if you're here watching this newsletter every evening with me, hit that thumbs up button for me. If you're part of the team here at the School of Trade newsletter, always appreciate you guys tuning in every evening. Hit that thumbs up button for me if you tune in every evening on this newsletter. But let's not waste any time. Let's get right after it here this afternoon. Get ready for tomorrow. Let's jump in to our economic news calendar to kickstart today's trading session. Let's jump in here, take a look at the schedule for tomorrow. Of course, is Thursday. It's February the 6th. As you can see, there's not a lot on the schedule here for tomorrow. There's not a lot of scheduled news here for tomorrow morning. We got that jobless claims tomorrow at 8:30 Eastern time. Not a huge market moving event tomorrow. So really, as we know, Friday is, of course, that Friday's non-farm payroll Friday, right? So we know we have some big news coming on Friday. We'll talk about the best way to trade that in tomorrow night's newsletter. But the most important thing for tomorrow is it does look like tomorrow is going to be a pretty wide open day here for us. Not a lot of news on the calendar. We also know that we were supposed to hear from OPEC today, right? We were talking about this last night, right? We were expecting to hear something early this morning from OPEC, but apparently there was some bickering back and forth inside of the OPEC meeting today. Some of the OPEC nations wanted to cut production. Countries like Russia did not want to cut production, and so they kind of postponed it until tomorrow, which is a little bit disappointing for today, but you probably noticed it felt like the market on oil had priced that news in, didn't it, right? That big bull run up today on the oil. So we were supposed to hear from OPEC today, but again, didn't hear any production cut or really didn't, there was no real announcement from OPEC today. The market sure thought there was, right? It seemed like there was, but there definitely wasn't anything. So tomorrow is definitely the day tomorrow. We're still kind of lingering here. What's going to happen, right, with this OPEC announcement? That's really the only kind of known unknown that we have for tomorrow. It really doesn't look like this coronavirus is really hanging on too much right now. Obviously, it is a big concern, but the markets appear to have shrugged that off pretty well. We got the State of the Union out of the way. They just, as I'm recording this right now, just voted to acquit in the impeachment trial. I don't think the market's expecting anything different there. So really the only thing kind of hanging over this the shoulder of the markets tomorrow is that OPEC announcement. And again, as I mentioned in last night's video, it'll probably be sometime right around that 7:30 a.m., 7:45 a.m. tomorrow morning. So, once again, like I said yesterday, we'll come in tomorrow morning early, 8 o'clock Eastern time. We get to our trade room every morning. We'll trade the strategy together. We do anticipate there to be a bit of an OPEC announcement tomorrow morning. And it looks like for right now, the oil markets have already priced in that production cut. But we'll see how, right, the market reacts to it tomorrow, and I'll give you some good plans to think for tomorrow for crude oil as well. So really that's the only thing we're kind of hanging out right now. We're kind of waiting to see, will they get that announcement tomorrow morning from OPEC? We don't have a lot of major news on the schedule, so it's kind of a wide open day for tomorrow. The only thing I would definitely say is be careful tomorrow afternoon. We know that Friday, of course, is that employment number on Friday morning. So typically, it's a big news number on Friday morning. So typically, Thursday afternoon, after 2 o'clock, 3 o'clock, you're going to want to be careful. We all know that as you get later in the day, things get a lot more difficult to trade anyways, right? You know that, right? Things are not as reliable as you get later on in the trading session. So, tomorrow morning should be a full session tomorrow morning. We might hear from OPEC, right? We may not tomorrow. I was expecting that to be today, but of course, hoping to have a pretty good day tomorrow, no matter what happens, right, with OPEC tomorrow. And as always, right, we'll be in our trade room, 8 o'clock Eastern time. We'll trade the strategy together, but look like a pretty wide open session here for tomorrow. Again, tomorrow late afternoon, got some concerns about reliability as we go into the employment number. And of course, tomorrow night's newsletter be very, very important because we're coming into that first Friday of the month. So make sure you tune in tomorrow night on the next edition of the newsletter, and we'll make sure you put the plan together for Friday's non-farm payrolls. But we got some work to do here for tomorrow's trading session, right? Possibly the last full session of the week, because we know Friday is a shortened day just because it's a Friday and because of the major news on Friday. Let's get after it here tonight. Get some crude, some S&P, some NASDAQ, and of course some gold. Jumping in here first of all, let's grab the oil here. And like I said earlier, it definitely felt like the markets had priced in a rate cut today, or a production cut, I should say. It's all the same stuff, really, right? And of course, we saw exactly what we talked about in last night's newsletter, right? That 1, 2, 3 reversal, right? Mark up the high, mark up that low, right? And you're buying off the low of that hidden channel, right? We talk about this every evening, and that's exactly what happened here on oil. What do we know right now, right? What do we know right now on oil? We know the market is bullish. We know we saw a nice big bull run, right? Most of the day today was very bullish. We also see this really strong move down, right? Now, what does a strong move tell me? Strong move tells me expect to see a second leg, right? So we know the market is bullish, but we have a little shot lower here, and that shot lower is definitely a big concern. What do we have here up top here? The little trading range, right? That trading range. What does a range tell me to do? Ranges tell me to sell high. Ranges tell me to buy low, and to use that middle of the range as the magnet, right? What goes up comes down, what goes down goes right back up, right? So we know the market's bullish. We know we have a trading range on the chart. Anytime we see a bull market, right, with a trading range, I want to be a buyer underneath this low, right? Go back up to retest the high. So I'm looking for ways to be a buyer on this. And then we see, of course, this big push lower here. That big push lower tells me we should see another leg in the same direction, right? So knowing that, right, that's really going to play into how we trade this here for tomorrow. So I want to be a buyer, but I'm worried that I got that big elephant in the room right now, right? That big push lower. So what's the best way to trade this? I know I want to be a buyer. I want to buy it going back up into that trading range. I've got the range waiting for me to get back into that trading range, but how do I deal with this big push lower? There are really a couple different options here. One option is simply wait for that second leg lower and then look for a simple seller failure off the EMA into a bullish pullback pattern going higher, right? This is a very, very common entry setup we look for in our trade room. The key is I want to be a buyer, but that big move down is a big deal, right? Because usually that means another big leg going lower. So what I'll do is I'll wait for that second leg to run lower. That will bring the moving average over. I'll look for a seller failure off the EMA and then look for that bullish pullback as we run higher from there, right? That'll be a really nice failure into pullback combination off of that low, right? Failure pattern into bullish pullback pattern. Now, there's also possibility here that they make this thing really run lower, right? Really runs lower. Then, if that happens, if we really start seeing a real strong push down, now I want to make sure I kind of absorb the market's momentum, so to speak, right? So let's talk about that here real quick. If we get that big run lower here now, we kind of break through that low on some pretty good strength, not a full reversal, but a big strong push down. Now what I'll do is I'll use that moving average again, and I'll look for the nested failure, the one try, the two try. Then we know where stops are, and I can buy right into those stops. Now keep in mind, those deep pullbacks, those nested failures, they oftentimes run real strong. And when they run, I don't want to chase after it. I'm going to wait for that little trap entry, right? We call this a a two-try trap pattern, don't we? Right? So that, of course, would be a nested failure into a two-try trap pattern as we go higher. So those are a couple scenarios I'm watching for right now on the oil. Again, I know we're bullish. I know we're in a range. I want to be a buyer and go back up into that range. I'm always looking to buy at levels of support. The problem is that you can see that strong move down. So again, one scenario is we make a run lower. We don't really get very much out of it, right? That seller failure into a bullish pullback. And then again, where's my targets? Back into the range, leave the runner, back up to retest the high. Or do we get that strong second leg down? In that case, right, look for that nested failure, 1, 2, because that momentum now will be quite strong, right? Nested failure now. Let the bears try once, let them try twice, and then we'll simply buy into those stops of those sellers. And again, oftentimes those nested failures, because they're such deep pullbacks, they'll run really hard back into that range. And in that situation, right, don't chase after it. Look for that trap entry, right, because trap patterns are the best patterns to avoid buying too high, right? Remember, you don't want to buy inside of that trading range. But I know what you're thinking. What if we don't pull back? Right? What if the market goes right back up into this range? If it goes back into the range, not a lot changes. It's still a bull market into a trading range. And what do? We buy underneath the range. And of course, we look for, eventually, once we go back into the range, what happens is the buyers will run out of bullets, right? Trying to go higher, and they'll sit sideways going inside that range. When that happens now, all you do is wait for the pullback, wait for that moving average to come over, and then try to get those bears to commit to sell off the EMA. And once you got those bears committing off the moving average, you can buy right into those stop losses with just a classic seller failure right below the low of that trading range. You can see an example of the back here, right? We go up into that trading range. We then poke our heads below it. The bears try to sell it, and you see what happens, right? Those bears fail, and the market rallies back higher. So if we do go right back up into that range and start going sideways here, right, definitely looking for that move back down, that seller failure, right, and buy right into those stop losses as we go back up into that trading range. There is potential for this to be a two-try trap right now. This would be kind of your most aggressive entry right now. And I say it's aggressive because it doesn't really absorb all that bearish momentum. That's the only reason why I'm not looking for a trap here right now. I always have a hard time being a buyer when I'm looking right down the barrel of that big bear move. It's just the way the markets work, right? Whenever you see a real strong move in one direction, you got to just give them the benefit of the doubt for that next leg coming down. That's why I said earlier, right? If we can get that next leg through, okay, now the bears, they got what they want. Now, once they're in, now I know where their stops are, and I can find my way in, going back into those stops, right? But if I try to buy right now, if I try to buy aggressively here, right, I could easily be walking into a bee's nest, right, that runs me right back down to retest that low. So, if you like to be a gambler, then by all means, that's the kind of the aggressive entry, be a trap below that low. And you can see it's definitely a two-try trap pattern. It's a great looking pattern. It's just I just don't like the fact that we're going right against, right, that very obvious bear momentum. Now, of course, there is a possibility here that we're going to hear from OPEC overnight. Again, probably won't be until lunchtime tomorrow in Europe, so it'll be 7:15, 7:30 for us here in the U.S. session. But if it does rip higher here, right? I mean, you definitely think 53 is a real big sticky number up here. If you look left, there's a bunch of ranges up there around 53. So 53 would be a really healthy target for a production cut rally. And a couple patterns I'm looking for here. One would be the 1, 2, 3 breakout, right? So if I see this pattern, strong move up, hold the pullback, and jump off the moving average. And again, if you combine this with some sort of headline from OPEC, cutting production, what they might do is they might meet halfway. The Saudis wanted to cut production. The Russians did not. They might meet halfway and say, we were going to cut production 500,000 barrels a day. We'll do it 250,000, right? So we might still see that reaction. We may not, though. So you really can't. There's a chance here the market may have already priced that in. That's the reality right now. So you want to wait till you get that 1, 2, 3 will break higher, then mark up that high. mark up that low, and that's going to give you now that buy off the low of that hidden channel. Again, we talked about it earlier, right? That was the same pattern, right? After they opened up here, right, we got that 1, 2, 3 run higher. Just mark up that high, right, down to that low and just buy off the low, right? That's all you're doing, right? Same pattern, same exact thing. So same thing that's set up after last night's newsletter is the same thing you're looking for as we go higher. So strong move up, pull back to the EMA and blast, right? Then, of course, you mark the highs, mark the lows, and you're buying off that low. Another pattern I'm watching here, again, this would all be kind of, the prerequisite would be a very strong move here right now, a very strong move up. Again, OPEC comes out and says we're cutting production. This thing just starts ripping higher because of it, right? One of the patterns we'll look for is that trap pattern, a very effective pattern, right? Basically any time you get a real strong move like that. The thing is, you don't want to buy high, right? You always want to find that kind of trap entry on that, just because of the way the markets work when the markets are running higher like that. So again, you want to get that strong move up and then pull back, profit taking, higher high, bears come back in. I'm looking for that trap low up there just to make sure, right, I'm not getting in trouble as I buy above the top of that trading range. So now we've got a pretty good idea of the ways I want to get long on this, right? I want to wait for a couple options here to buy off of that low. I'll look to see if we can go make a run or if we get stuck back up into that trading range. How could I sell this market? What do you think is a good way to be a seller on the oil? I definitely wouldn't trust a short trade off of this pullback right now just because of where you are, right? You're sitting right at the low of a hidden channel. You're sitting below the low of a range. So I'm not sure I would want to sell it right here. A couple things I would look for, though, is if we do see a strong run lower, okay, that will obviously be a reversal. At that point now, I would mark up that low, mark up that high, and look for a hidden channel off of that high. Now, in all honesty, that may not happen. What is probably more likely, if we do get that strong move down, is we're probably more likely to see a smaller 1, 2, 3 reversal here, a 1, 2, 3 breakout, right? The smaller channel is probably going to get you in. You're probably not going to be able to use that really wide channel on that one. So as we get and again, same patterns before, right? I just don't want to, I want to wait for the move down. I want to wait for these bears to really show me they mean business and hold that pullback. Once I have that pullback held, then I can mark the low, then I can mark the high, and now I've got that hidden channel and I can sell off the top of that hidden channel. Target's pretty easy. Target's back down to that 49.31, right? Down to basically to retest, right, this morning's low. So again, right, even though you would like to get that 1, 2, 3 reversal and get that big channel, I just wouldn't hold your breath. Right, I wouldn't hold your breath on that on that big channel. Probably going to be a 1, 2, 3 smaller channel here. Right, draw that low off that high, and again sell off the top of that channel. Another pattern, obviously, is that 2 try trap pattern. Right, so strong move down, profit taking for the bears, lower low, trap high for the sell back down, right? That is a viable setup as well. Just remember, though, the prerequisite for that is a very strong move down, right? Again, and this may come in the wake of some sort of OPEC announcement where OPEC may say, nope, we're not cutting production. The market may have already baked in a production cut. Sort of felt like this morning, didn't it? And we may see the market really reject the idea of no production cut, and it may take off to the downside, right? So if they come out and say no production cut, this may send us right back to that low from earlier today. It's very much, again, we're really waiting on OPEC right now to kind of give us some more information to work with here. We know we have potential for a snap back up to retest these highs. Just don't chase after it. Wait for the right pattern. And speaking of the right patterns, we've talked about failure patterns, nested patterns, 2 try traps, 1, 2, 3 breakouts. I want to give you a much deeper dive on this. We'll be trading these patterns tomorrow in the trade room with all of our clients. But if you're not going to be with me tomorrow in the trade room, grab our trading course. I got a free trading course for you in the upper right hand corner. At the very least, get that free trading course. That way you can make the most out of our time together every evening on this video newsletter. I'm going to send you hundreds of examples of these patterns on our favorite futures markets. You'll learn all the favorite setups we use in our trade room, not to mention the entire strategy we use every morning at the opening bell. So again, tomorrow morning, 8 o'clock Eastern time, I'm just marking the chart charts right now. We're going to trade this together tomorrow morning at the opening bell. If I don't see it there, though, make sure you grab that free trading course linked up in the upper right-hand corner. And don't forget, all the links I talk about tonight will be linked up in the description of this YouTube video, so they're all there for you as you need them. All right, we're looking good. So now we got a pretty good plan here of what to look for on the oil. Just remember, buy low, sell high, and avoid the middle of that trading range. All right, let's keep going here. So we got oil looking good here. How about some S&P? Let's grab some S&P and take a look at the E-mini. Now the S&P, what do we know about the S&P right now? We know the market is bullish. Okay, that's pretty obvious to see. We also know there's a trading range on this chart. And, much of we just talked about, there's a bull bias into that range. And what's the best way to trade a bull market into a range? You wait for the price to go lower, you wait for the pullback to the moving average, and you buy right into those stop losses, right? This is the exact same pattern I just talked about many times on the chart on oil, and you can see a great example of it right in front of you right here on the S&P. You can also see how common those what we call failure into pullback combinations are, right? You can see how common that is. That is, again, a failure into a pullback combination. It's a very, very common combination setup. And again, take it below the range, low of a channel. Whenever you're trying to buy off a support level, it's a seller failure, again, into a bullish pullback. I'm not sure about the bullish pullback on this one. It was pretty close, the trading range on that one. But definitely a failure pattern here. Right, that failure pattern, obviously, not sure why this thing keeps on messing up on me, right? But there's my trading range, right? So we know we have a range on this. So we know we're bullish. We know there's a range. My big question is, as we are above that trading range tonight, my big question is, will this develop into another range up here? We know we're bullish. My big question right now is will this stick? Right? Because remember where we are right now. We're right back at those all-time highs again. Right? The NASDAQ got their all-time highs yesterday. The S&P is, at this point now, as we close up here on a Wednesday evening, they just hit those all-time highs. So we know that the S&P now has retested those all-time highs. So we know we're bullish. We know we have a trading range. We know we are up above the top of that trading range. What does a range tell me to do? Ranges tell me to buy low, sell high, and avoid the middle, don't they? Right? So I know that when I have a range, I look for that seller failure, right, to buy underneath the range. How do I sell above the high? Right? What's the best way to sell above the high of a range? Well, we have to use a slightly different pattern. Instead of looking for, for example, a seller failure, right, to buy below the range, instead of looking for a simple buyer failure to sell above the high, we have to remember this is a bull market. And so really the only way I can get short off these highs right now is to use what I call a nested failure. And we talked about that on the oil chart, right? So as you go up, right, buyers try once, buyers try twice, and then I can sell it. Now, I'm not too convinced yet about being a short seller on the S&P 500 because as you probably have noticed, the market's very, very bullish right now. So if you're going to trade a reversal on this or a short off the high on this, I would go very small position. And again, make sure you see the buyers try once, try twice, and then we can sell them back down from there. You can see on this example, right? They try once, they try twice, and they go. That's why I always wait for, if I'm going to sell this, I want to see them once, I want to see them twice, and then I can sell it back down into that range. And again, I call this it's kind of a nested variation, right, of that failure pattern. So I'm using the range. I want to buy low, I want to sell high, and I think the biggest thing we have to worry about right now, like I said earlier, is the S&P is in this a lot lately, where it's kind of broken free into a new trading range. So it's kind of a lot to get ready for here on the S&P 500. We know the plan if you want to short this thing. What I really hope we get is, I hope we get the market back into that range. Hopefully we'll get the pendulum swing. And really what you want to think about is, okay, how do I buy this market? There's a couple things we can think about here. The first one will be, we've got to get back down to that low, right? I don't want to buy up here. I want to buy down here. Right? There's really kind of two scenarios. One would be, do we go back into the range and just hang out for a while? Or do we just slice right through the range. I know the amount of the move above the range is the amount of the move below the range. So I know there's a lot of support levels down here. I'd like to be a buyer around those areas. I think the only question on my mind right now is do we go back into the range and sit? If that's the case, now I can use just a straight failure pattern, right? I can get underneath the trading range. I can wait for that moving average to come over, right? I'm down inside my buy zone here. I can look for a seller failure. And then again, if we have enough space for it, a pullback going back up into that range. Very, very much the same pattern that we saw there, right? The lows before, right? That's something we're watching here for tomorrow. Another thing, though, you got to think about is what if we don't stop inside the range, right? What if we just dump back off these highs? That could easily happen. I mean, we're at all-time highs. You know, something spooks the market. People take their profit off the table. It could easily collapse back down off these highs. If it collapses now, I do still want to buy this market, but I don't want to get too aggressive, right? Now what I'll do is, this is just what we talked about on crude oil, if we get those deep pullbacks, the deep pullbacks are great because they give you a nice risk-reward ratio, but that risk-reward ratio comes at a price, and the price is momentum. So to absorb that momentum now, we use that nested failure pattern, which I know I've talked about a lot here so far, and the reason why you wait for 2 tries is because of that momentum. Right? That's exactly like we talked about on the oil, right? So again, that's kind of those are 2 scenarios you're watching for, right? Do we pull back and sit inside the range? At that point, seller failure, back into the range again, or do we slice back through it? Now momentum's a concern. Now wait for the moving average here, right? 1, 2, and then we can go buying back up into that range. Those are some variables we're watching for here right now. Now another thing I'm watching here is the overnight session here, right? So if we sit and go sideways, if we sit and go sideways here for a while overnight, that's going to basically tell us this range has now shifted higher. And if we have a bull market into a range, what do? We look to buy underneath the range. Now, this is going to be a little bit uncomfortable. It will, right? Because you're going to be going right back into that range. But this is why I say if we sit here for a couple hours, right, and we see the market bouncing around back and forth into a new range up here, now we know that range confirms that buyers are now more comfortable up around that 33.30, 33.35. We'll know more about that once we see that trading range. And again, the plan is pretty simple, right? I want to get down underneath the trading range. Once the buyers run out of bullets, so to speak, the market will pull back. The moving average will follow. We'll hopefully see some sellers try to sell that pullback. And again, we'll look for that straight seller failure into a bullish pullback. Again, same type of pattern, right, that we saw below the range earlier today. So it's a relatively simple plan. It's just it takes the experience to know that if they stick up there for a while, right, sometimes those ranges get adjusted higher, right? Does that make sense? Right? So sometimes the ranges will break out and they'll sit up around those highs. You'll have to be comfortable at that point. And again, we'll do this together tomorrow, right? Together in the trade room, obviously. But, again, if you're not with me tomorrow to help me guide you in the trade room, be aware. If we stick up there and kind of get pinned to those highs, it's going to tell us now we'll use that new range. It will pretty much just ignore, right, that previous range at that point. It's uncomfortable. It's not easy at first, right? But once you kind of get the trick of it, it gets a whole lot easier. Now, we may also see the market blast higher, right? I mean, let's not forget, it seems like every morning right now we're coming out to a big bull rally here. Most important thing would be to know kind of where, right, we want to go here. I got a couple levels I'm watching here overhead. That 55 level is, of course, the measured move. That would be an easy target here. If the market really keeps going, I've got another level up top here, 33.71 up to 33.81. So think about that 33.71 if this thing really gets out of control here tomorrow morning. At this point, there's not much reason why it would, unless we hear something from Asia or Europe here overnight. At this point, though, like I said earlier, it doesn't look like the flu is kind of on the mind of the markets. The impeachment stuff is over with. Unless Yeah, it's really tough to imagine what news can come out overnight that would be that bullish to push it that aggressively through. But at the same time, though, right, we've seen crazier things in the last couple of weeks here of the first of the year. So we definitely know it's possible, right? Some options would be a 1-2. Now remember, keep in mind we're right at these highs right now. Right, we're right at those highs, so I really can't buy it as it's going higher. It's not going to be a very reliable trade. What I'd like to do is get a 1, 2, 3 breakout of that high, mark that hidden channel, mark that low, right? Mark the high, find the channel, and buy off the low of that hidden channel. As you can see, I'm using that same pattern quite a bit. It's very reliable, as you probably have already learned, and that's why I trade it. I really only want the best of the best trade setups. There are lots of different ways you could trade, right? But there's only a handful of patterns that I really trust. This is one of them when we break out of those highs. If we do get that real strong kind of rip higher, very emotional, very impulsive move there, 1 try, higher high, 2 try, trap low is that 2 try trap pattern. And again, at that point, your first target is that 55 area. And then not a bad idea if you have an extra contract on, leave the runner and see how far it'll go, right? We definitely have seen some very impressive moves here over the last few weeks. So now we have a pretty good idea here how to be a buyer on this, right? We talked about here kind of how to get right long off of these lows depending on how the personality looks or how much time we spend inside that range. We talked about, of course, if the market runs sideways up here and forms a new range, then we talked about a breakout running higher. So we got pretty much all the bases covered here now to be a buyer on this. How could I be a seller? Well, again, the only way to really sell it effectively right now is to wait for that 1 try, 2 try, and sell it from there. Remember, you want to make sure those are lower lows on those 2 tries. Very, very important, because if you get a higher low, you really haven't got more buyers getting in yet. So lower lows, and then once you see those 1 try, 2 try for the buyers, nice strong signal candle closing below the moving average, right? That will be your short going back down in. Now your target for the short, and again, I think it's a little bit aggressive for me, right? But your target for that short will be that pendulum swing back in the other direction, right? We talked about that already. Now, this may end up nice strong move down, moving average comes over, and instead of a failure going back up into the range, they may hold that pullback, and this thing may run. And if it runs, right, now it's a 1, 2, 3 reversal and a 1, 2, 3 breakout, mark that low, find that high, and again, notice how I draw that hidden channel, and then now we have that, right? Now we have that, that what I call 1, 2, 3 reversal, or in this case, it's a 1, 2, 3 breakout and a 1, 2, 3 reversal into a hidden channel pullback. Where are my targets? Targets are easy on this one, right back to retest today's low, which also happens to be that magnet, that gap at 32.91. We've been talking a lot about here this week. So we know there are some options here to be a seller. Be careful though, right? Be careful trying to call a top on this market right now. Also be very careful trying to sell as the market runs lower, right? Remember, wait for it to make that strong run lower. Make sure it holds that pullback underneath that range and runs. Then you can go out, find that channel and sell right off that channel, right? And again, 1, 2, 3 reversal into hidden channel pullbacks. And again, guys, tomorrow morning, we're going to do this together, 8 o'clock Eastern time, like we do every morning. It's been a great week so far. Looking forward to another great day tomorrow with you guys and gals in the trade room. If you're not with me tomorrow in the trade room, make sure you grab that free course linked up in the upper right-hand corner or in the description of this video. Looking good. Got our targets ready for the upside and the downside. How about some NASDAQ here tonight, shall we? Let's grab some NASDAQ. Now, the NASDAQ is quite doozy here today, right? Kind of punch drunk this NASDAQ felt. If you were confused by the NASDAQ today, I think everybody was kind of confused by the NASDAQ today. And the NASDAQ, basically, we know it's a range right now. What do we know right now? We know the market went up, right? We know that for sure. We know it come tumbling back down. They got a 1 tick lower low, and they bounced off that low. So when I see a move like this, I know it's probably one big range now, and those buyers have one goal, and that is to get back up to retest those highs, right? It's just one big range. Now, obviously, while it was happening, it was very difficult because it went straight up and then straight down and then chopping around here right into lunch. Very difficult to trade the Nasdaq today, as you probably realize. But again, think about it, right? We go down, we go up, we go down, we go up. It feels like a range, right? It's a range. It'll be traded like a range, and those buyers now, anytime you see a range like this, you know they've got one goal, and that is to rotate back and forth from top to bottom. So we know this is a range-bound market. There's definitely an overall bullish tone to it. The trading range here, obviously the bull bias to it, right? That bull bias to it, as you can see here, then goes into a range here, okay? So we know there's an overall bull bias now to this market. What else do we know here? You'll notice I've broken this thing down, and basically the kind of the trick to this is that once you see a wide range, you know the middle third is going to be the stay away zone, right? So anytime I see a really wide range, what I do is I break it up into 1/3 increments. Right? So 1/3, right? 33 1/3, 66.6, you know what I mean? Right? So it's 1/3, 1/3, 1/3, right? You can break this up into, right, 1/3, 1/3, 1/3. Stay away from the middle third, right? Sell the upper third and buy the lower third. Now, I'll leave it at that. I'll leave the rest of my secrets to our video classes here at School of Trade. But think of it that way. Big wide range, right? Bracket the high, bracket the low, right? Avoid the middle third, right? Buy low, sell high. We don't see these very often. You probably have realized that. We don't see these situations very often. So, don't get too overwhelmed by it. You're not going to see a lot of these overall. I've been doing this for a long time, so I've seen my fair share of wide ranges. So really the key right now is it's a bull market, right? Again, overall bullish. You can see there's a big bear run down here right now, so we'll definitely want to anticipate a possible retest of that low, right? Anytime you see a big move like this, you know there's potential they make a run back down to retest the low. I got a plan for that here. It also looks like the bears tried once, they tried twice, right? That'd be kind of like that nested failure that I keep talking about, right? If you want to buy but a big move lower, what do? You wait for the bears to try once, you wait for them to try twice. That's that nested failure pattern I keep talking about, right, on these deep pullbacks. Okay, so what's the best way to trade this now? Well, obviously the bull bias is important. It's difficult to call this a bear market right now. The market's very bullish overall. I want to buy low, I want to sell high, and I want to avoid the middle of this trading range. So we know there's a good chance this market will make another run back down to retest that low. What I want to do in that situation is just keep trying to get those bears to come in, try to sell off that EMA, and just buy into those stops. Now, as we go higher here, right, it's kind of the same thing, but it's the opposite direction. You're now going against the trend now, so you don't want to get too aggressive selling off the high, right? You want to let them try once, try twice, and then run it back down from there. You saw that big move up earlier, right? Once, twice, and then down from there, right? So big move up. Again, don't be a hero. Don't try calling a top. Wait for the pullback, wait for the buyers to try once, wait to try twice. Again, lower lows on that second try. That's the key here. Remember, if you don't have lower lows, you're actually not recruiting more buyers into the market, right? Buyers want to buy low, sellers want to sell high, right? So if you don't get a lower low there, you're not actually getting all the buyers in. You're staying inside that prior swing. Hopefully that makes sense, right? So again, I have no problem going down below the range, watching that moving average come over, seller failure into bullish pullback, back up into that trading range. That will be a relatively easy plan for tomorrow. Again, it's a seller failure pattern, right? It is a bullish pullback pattern. Now, again, right, it's very different than we saw back here, right? Back here was a very strong move down. So naturally, you're not just going to use a seller failure, because what's going to happen? They're going to come back, hit it again. Right? And you're lucky if you made money on that, if you took it that aggressively, right? Better off with that strong move down. I do want to buy. I want to buy low, but I got to respect it once, twice, and then back in from there, right? We don't have that problem if we run back down again, right? We run back down again. I can go pretty simple here with a seller failure into a bullish pullback. Now, let's say we make a strong move lower, right? A real strong move down. Is that a breakout yet? No, I wouldn't call it a breakout, right? I would call it a very strong move. And so the potential for a reversal's there. But again, I would still look for that nested now. 1, 2, and then back up from there. You're getting it, right? Am I doing okay explaining this right now? Right? How about a thumbs up if I'm doing a good job on explaining it? Is it making sense right now? Right? It's all about momentum. Failure patterns are great during range-bound markets, right? Sideways markets. But momentum plays a big factor in that. Does that make sense, right? If it does, hit that thumbs up button for me. If it doesn't make sense, let me know in the comments section. Right? Let me know, let me know you want, whatever, different ways of saying this. If it's not resonating with you, right? It's all about momentum and how we use those failures. And again, I'm just simply drawing on the screen right now. I've got literally hundreds of examples of these patterns on our favorite futures markets in our free trading course, linked up in the upper right-hand corner or in the description of this video. So now we can have a good feel of what we're trying to do here. And again, as we go higher, right, I'm not going to use the same basic failure pattern off the high. It's a bull market, right? And I want to sell in a bull market, but I will wait for those buyers to try a couple times and then short back down again. All right, I think I've covered that enough times at this point. I'm sure a lot of you guys are like, move on, Joe, move on. I just want to make sure that you get it. All right, now, how would a breakout work on this? So a breakout is relatively simple. Again, we want to stay out of this range, right? Stay out of the middle. That's going to be really, really tricky in the middle there. And if we sit here a lot of time tomorrow, just sit on hands. It's not going to be a very easy place to be trading. You wait for the run lower, wait for the failure, buy it back up, right? Wait for the run higher, wait for the failure, sell it back down. Just stay out of that middle. How about a breakout? How about a bear breakout? A bear breakout wouldn't be too difficult, right? A 1, strong move down. 2, pull back to the EMA. Again, right? Again, this is that 1, failure back in. But if they hold that pullback now and we get some strength on this, by all means, this market now has reversed. Now I'm going to mark up that low. I'm going to bring up to that high and look for that hidden channel so I can sell right off that hidden channel high, right? The very, very important part of this, right, of this process. I'm not opposed to a 2-try breakout, but it really has to rip, right? It's going to have to really be a very strong move down, profit taking from the bears, lower low in price. That gets the buyers in. When the buyers come in, we can whack it right with that trap high. And remember, that trap pattern is best when it's just above the moving average, and it usually will be right inside of some hidden channel, right? It's kind of think about it that way. I don't want to give away too much of my secret sauce because we'll do it together tomorrow in the trade room. But I want to make sure you guys have as much of an advantage as you can tomorrow on that move lower, right? So that big move down, again, it's got to be a real strong move down. Like, whoa, this thing is running. And of course, look for those buyers trying once, buyers trying twice. And again, because we're going a little bit against that trend right now, I want to get that trap high. Those traps are almost guaranteed winners when you get that nice momentum moving in the right direction. That's what we're trying to do. We're trying to get our winning percentages up nice and high, especially for all the new traders out there. A high winning percentage is really, really important. Now, as far as the breakout going higher, the big problem we have right now is we are way up on this chart. The only level I can really anticipate right now is that 9,500, right? That's kind of the next big psychological level. You'll notice they're not paying too much attention to like the 9,400, 9,300. It looks like NASDAQ right now is really paying most attention to those big, big round numbers, right? So 9,000, 9,500, right? Things like that. So we have to assume that's the next big psychological level. But how do we get there? It's going to have to be a strong move up. They're going to have to hold that pullback, and they're going to have to really jump off that moving average. The timing on this is really going to be tight because I don't want to buy that pullback if they get to the big round number. So I've really got to get in on that before they get to that big round number, because what will probably happen is you'll probably see it, again, rip higher and then kind of go sideways up here. And then anything is really possible once they go sideways. At that point, pull back, right? Seller failure. I know I'm sounding like a broken record right now, but that's kind of what you would look for if it starts getting pinned up around that 9,500. You could also look for the two-try trap pattern, right? Strong move up, profit take, and again, this would be this would have to be a very strong move up because obviously you'd be buying right into those highs. But a strong move up, a higher high, a trap low, I am definitely not opposed to that as long as we get a strong move. because you know in a strong move, the odds are very high that pullback will get bought, and B, we haven't made it to that big round number yet, right? Those are the two things you have to make sure if you want to buy that two-try trap pattern. Now, again, the bulls want to go back up to 9,500. Well, the bulls want to get back to the higher day. Their breakouts, though, want to get back up to 9,500. If the bears can get their act together here, that gap below, right, 91.36. I said it earlier, easy come, easy go. This was some of the easiest movement we've seen, right, in a very long time on the NASDAQ. NASDAQ acting like a penny stock here the last 24 hours, last 48 hours. If we do get that 1, 2, 3 reversal, right, that 36 3/4 levels is a pretty easy objective for those sellers. I'll believe that when I see it. I'm not going to try to make a prediction of that reversal right now. So we'll wait for the reversal and we'll trade the reversal accordingly. So lots of great information on the NASDAQ, a wide range. Break it up into thirds, avoid the middle third, buy the low third, right? Sell the high third, and watch momentum. Momentum is really the key, right, to choosing which pattern is going to work best for those breakout failures. Last but not least here, let's grab some gold here tonight. Over on the gold is definitely a bit tricky here for us this evening. What do we know about gold right now? We know that gold is overall bearish. So as we zoom out, we can see here gold is obviously bearish, right? And we can see we're into a trading range environment, right? That range we talked about from last night's newsletter. So we know we're bearish. We know we're into that bear, right? Into a trading range. What does a range tell me? Ranges, of course, always tell us to buy low, sell high. What goes up will come back down. What goes down will come back up. What is my favorite way to trade a range? Well, again, we're bearish. So the best way to do it is wait for the price to go up, wait for the buyers to try to buy the pullback, right, and literally sell into their stop losses. Or as you go down, what's the best way to buy in a bear market? A nested failure, right? 1 try, 2 try, and then back up from there. Right? You can see an example of that back here. We go running lower, 1, 2, and then back up from there. So nested pattern to buy off the low, failure pattern to sell off the high, and of course avoid the middle of that trading range. What else do we know here right now? We also know we have this rising support trend line. Now, this is a very important clue right now, because obviously this clue, right, whenever I see a rising support trend line like this, I always think, okay, I don't want to sell into support. I want to sell at resistance, right? So selling into support is not a very good idea here. What I look for now is I look for traps. Anytime I see a level of support and I don't want to sell into support, I start looking for opportunities here for traps. And you can see there's an easy little 2-try trap pattern waiting here right above that high here. That would definitely be where, right, short-term sellers are certainly looking here, because what you'll notice is it comes together right with that hidden channel. So I really like that potential trap high up there, just above that last swing, right? Get me away from that trend line. That will definitely be something on my radar here in the next couple hours. If we do make the run higher here off of that trend line, well, now that makes my job a whole lot easier. The only problem I see is the market will be seen as pretty bullish at that time. And so the better pattern now would be the nested, the 1, the 2, and sell off of that from there. So really two things I'm watching here. Again, I want to be a seller going back down into that range, right? I want to be a seller now going back into that range here, but I got that trend line in the way. So one thing I'm watching here to avoid selling into that trend line is a trap high. And you'll notice that trap high really sets up nicely off of that hidden channel high, right? It sets up nicely off of a measured pullback or a measured correction level overhead. I like that setup a lot here, especially with that rising support trend line. If it blasts, right, if it runs higher here, now we get away from that rising support. We're not out of the woods yet for the bulls, by the way, right? Buyers try once, buyers try twice, and then I can short back down into that range. Because again, at that point, it will feel very bullish in the market. And even though it's a range, whenever I feel like the market's very bullish those highs, because you'll notice at that point, it'll be higher highs, higher lows. A lot of people will see this as a bull market. So I'll give it a little bit more of the, I'll give the bulls a little bit more of the benefit of the doubt before we try to pull the trigger, right, and sell back into those stops. All you're doing is letting the buyers just wrap that noose around their neck and then selling once you see that strong signal right right into those stop losses, right, going back down. What else do we know right now? How about a breakout, right? So we know the buy, we know sell, right? So trap high to sell above the high, right? If we make a run, so another option would be here. I'm really always looking for a nested to buy off the low because we are overall bearish, right? So if we go into the range, struggle here, and then go lower, I'm still looking for that nested failure because it is a bear market. Or we go tumbling back down, still looking for that nested failure. So not a lot is different there. That's a good comparison to the S&P 500, right? The S&P, we were thinking about if it sits inside that range, we might have to go with a different pattern on the S&P. That's not the case here on the gold. So looking at this as a chance to buy underneath that low. Remember, stay out of the middle, right? So we don't want to do anything in the middle of this range. Buy low, sell high. How about a breakout look? Yeah, breakout, 1, 2, 3, breakout. Absolutely, that's fine by me, right? 1, 2, 3, strong move up. They hold the pullback off the EMA. We mark up the high, mark up that low. We're buying off that low of that hidden channel. 1, 2, 3, breakout into hidden channel pullback. Or maybe the market just takes off to the upside, right? As it rips higher here. Shallow pullback 1, higher high, trap low. Now remember, you can use these things without a trap on this. I like the trap though, personally, because that's really going to be almost a bulletproof trade on that, right? For some reason, for in some examples where you've got plenty of space overhead, you can wait for a strong move up, 1 try, 2 try, right, and run from there. But just remember though, you've got some overhead resistance here overhead, so I would definitely keep an eye on that for a 2 try trap. Strong move up, shallow pullback, higher high, trap low, and then up we go from there. And again, this will usually be just below, right, that EMA. And a lot of times, it'll come right off the low of a hidden channel there. So keep that in mind as we make a run higher. It looks like as I'm recording this right now, gold is running back into that range here. So again, if we sit inside the range, up 1, 2, same basic idea, right? We're selling above the top of that trading range. Basic stuff we've talked about here, right, on the newsletter tonight. Right, so if we do end up back in that range, it's a nested below the low, right? It's a buyer failure into seller pullback short off the high, like that, right? It's a buyer failure pattern into a seller pullback as we short back down into that trading range. We're watching out for breakouts. Now, what if we keep going lower here on the breakouts tomorrow, right? Strong move down, pull back to the moving average, right? We break down, right? Okay, fine by me. Mark the low, mark the high, right? Sell the high of that hidden channel. The real goal, though, is where's the target? The target's right down there at that 42.8, right? A major low on this new contract, this 420 contract here on the gold. So we're watching out for breakouts, but we're really focused on buying low, selling high, using the appropriate failure pattern, either a straight failure or a nested failure, right? Or looking for the 1, 2, 3 breakouts or 2 try breakout patterns. Now you guys know my plan for tomorrow. Tomorrow morning, 8 o'clock Eastern time. Hopefully I'll see you there right there with me. We have a lot to look forward to tomorrow. Don't forget, getting registered is really easy for our daily trading sessions every morning at 8 o'clock Eastern time. I'll put all the links, by the way, to get registered for our trade room tomorrow morning. I'll put them all right in the description of the YouTube video. If you're on the blog at Sideways Markets right now, I'll put the big blue button for you below the video tonight on the trading blog. Or, as always, if you're on the website here at schooloftrade.com, it's the advanced course is what you want. Our advanced course is a lifetime membership. It includes lifetime access to our video classes, our daily trading sessions, all the ongoing support. You can learn more on our website. Don't be afraid to call me if you have any questions about anything. I've got live support. That always easy if you guys have any questions as well. And as always, right, if membership isn't quite right for you at this point, definitely take that free trial. Come join me on a free pass to our trade room. Grab our free trading classes, right, to learn the trading strategy. And again, hundreds of examples of how we apply these patterns to our favorite futures markets. Guys and gals, thank you so much for being here tonight. I apologize, the software was a bit squirrely here, but hopefully you saw value in tonight's video. If you liked the video, hit the thumbs up button. Don't forget to post those questions in the comment section below. And as always, guys, right, subscribe to our channel. That way you never miss another great video. That's it for me tonight, though, guys and gals. Have a wonderful evening. We'll see you guys tomorrow at the opening bell. If not, we'll come back tomorrow night, and we'll do it again on the next edition of this nightly newsletter. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.